Hey, hello. My name is Scott Ead. I'm a long-term advisor, financial and insurance advisor, and been doing this for about 25 years. And I just wanted to go over some questions some people may have actually asked me about long-term care and the need of it and how to fund it. And I just wanted to go over one particular way that is becoming of interest to all of my clients who are, over the age of 60 and looking at increases in long-term care, looking at companies that are pulling out of the market. And, good reason for that because as we all get older, the claims go up. So these insurance companies are definitely looking at their bottom line and figuring, is it cheaper to increase now to offset claims later, or is it should we just pull out of the market altogether? So it's something that you have to look at, and a lot of people, and my clients are mostly 55 plus, so they are looking at on a regular basis. So hopefully you can take some information on this and use an idea or two of what I've got to talk about. Okay, this is all ad lib, so if I make a mistake, I apologize, but here we go. I'm going to share my screen with you. Okay. Okay, this is our website, just to go over. It's a planfortomorrow.com, a planfortomorrow.com. And on this site, we have all kinds of resources. If you want to figure out everything I'm talking about, it's going to be located on this site or soon to be added. We do a lot with retirement, with annuity products for seniors, especially seniors who are, worried about retiring soon. And we do a lot with Medicare, and we do a lot with long-term care and life insurance. So it's just one of those things that we do have a lot of information, and we're in multiple states. So feel free to go to our website. It's got all kinds of information, testimonials from clients, Medicare guaranteed income products like annuities and life insurance. So basically, again, go to uplanfortomorrow.com and you'll be able to look at this. So let's get right into it. Long-term care. Long-term care has the cost of long-term care is just shooting up as people are getting older. That's just the way it is. And so one of the ideas we have is, one way to fund it would be through annuities. Another way to be funding it would be through a traditional long-term care product, which, a policy, which we offer them. They're expensive, but they're a good option. And the third way is through life insurance. A lot of these hybrid life insurance policies have a long-term care feature built in. Now, all three ways are going to give you full-blown long-term care coverage. It's just a matter of which way works best for your budget. Okay. The good thing is 2 out of the 3 of these options are going to allow you to use your own money, and if you never use it, you haven't spent it. So that's just a nice way of doing it. It's basically it's a what if it happens, I know what my maximum amount of pockets are going to be. And basically that's something we can look at. So getting right into it, 5 reasons to have long-term care insurance. Is it worth it? Protects your assets. Protecting your assets is very important, because if you go into a assisted living or a nursing home and you don't have a trust, even trusts are not impervious to a total protection nowadays, it seems, or if you don't have anything laid out that isn't in your name. If it's in your name, it's certainly something to risk. And you don't want a long-term care facility. The first question they're going to ask your family is, how are we going to pay for this? And what are your assets? Because we may attach those. And it does happen. And a lot of times they do a spend down into Medicaid, which can be a painful experience. Okay. It takes pressure off your family. So, something happens to you, whether it's cognitive or some other illness of long-term care, they have a place to go back to and say, look, we need assistance. And it's, these companies have people that will line up and set up nurses and set up plan of care explain how the benefits are paid, put you in touch with the right sources. It just takes a lot of pressure. I can think of a lot of people that have kids in multiple states, and they have their own families. And dealing with mom or dad, it's really important. I have a lot of clients that have had, especially through COVID, have had a lot of concerns with long-term care and really no place to go. Um, so that's a nice feature to have for your family, to have a policy of some sort to back up, even if it's just a plan of care through, was set up with these companies to help navigate through the storm. Gives you options for care, like I've been mentioned. We can give you 2 or 3 different options, so that you'll know what options are out there, so that the days of what if it happens, you're going to be at least protected somewhat. Okay. And all these plans are all very, very detailed, and it's very important that you look at it now, because if you wait, the longer you wait, the more expensive it is. If you have an illness, then you may not even qualify for it. So it's something you need to look at now versus later. This is a now thing for sure. Some long-term care policies may come with life insurance protection. I think I mentioned it, one of the 3 ways, a life insurance with a long-term care policy built into it, or an annuity with a long-term care policy, or an individual policy. So it gives you peace of mind, gives your family peace of mind. So we'll get right into one option that a lot of my clients look at, since I do a lot with retirement. I do a lot with annuity planning for these clients. So they're always looking for ways to have, some protection, but they don't always want to pay for it. But what if it happens? What is their total out of pocket? So the company that I like a lot is Global Atlantic. They have a program that's called Forethought Insurance Company, and they've been around for a long period of time, and they have a great product. This is basically an annuity that has a long-term care, full-blown long-term care policy built into it. And let's just go down some of the thoughts on this. This is Meet Clara and Wade. So these are 2 people. They've been together for 45 years, and now they're 70 and may need help with an illness, an injury, or physical or mental disability. Okay, it goes into detail on this sheet, and I'll put this on my website as a link, or on our Facebook page, which is at greenmountaininsurance.com. Okay, it's right off of our site. You can click right through to our Facebook page. So, for example, if Wade had a stroke and needed support or hospitalization, could Clara, who is 5'7", 100, help her 5'11", 192-pound husband out of bed for bathing? This is a reality. I see it with a lot of single people that need help and really don't have anybody. Okay. You might have boyfriends, you might have girlfriends, but to be honest with you, you need protection in case no one's there. That is just flat out true. And I probably have maybe seen 6 or 7 clients in the last few years where that's been a concern. Okay. And so the options are that they just use their retirement savings to pay for the long-term care, which that money, when it's gone, it's gone. And we don't know how deep it will go. Long-term care is not inexpensive. If you have Alzheimer's, if you have some sort of dementia, it could go on for years. So, using retirement savings is not a good solution. They can use their existing health insurance. Well, the good thing about Medicare does cover 100 days, but after 100 days, that's with a supplement or a Medicare Advantage. So basically, after 100 days, Medicare only covers 20 days. So 21 through 100 would be through your supplement. And after that, it's all on you. So you revert back to your retirement savings. Where they can buy traditional long-term care insurance. A lot of companies are out there. I deal with them all. They're all good quality companies, but they're all looking at the bottom line, and they're looking at claims. Long-term care insurance can be very expensive, and it's not always a great option, but it certainly is a solid option I'm happy to talk about. So let's move down here. Is there another option for Clear and Wade? Well, obviously, yes, there is. Okay. Simply speaking, it's putting it into an annuity. The annuity in this case is called Forcare. Okay. And Forcare, basically, I want you to think of this product. If you put 100,000, 200,000, whatever it is, in this as just another piece of your financial portfolio. So you may have mutual funds over here, you may have savings over here, you may have bonds over here, and you have an annuity sitting over there. Probably have an annuity that does a lot more than this, because we have annuities that do everything that are exceptional. But you also have this chunk of money that's just over here is part of your portfolio. It might be $100,000 just added into your numbers that will do a lot for you. And I'll explain what I mean. So if we take $100,000 or $200,000 into this product, it will do a lot for you. Okay. Basically, any gains on this annuity are deferred. So you don't, any, if it makes any money, guess what? You don't get a 1099 at the end of the year. It is deferred as long as it's sitting in the annuity. It gets a minimum interest rate. Now, this particular product is an interest rate product, so it's not setting the world on fire. All we're doing is taking, suppose you got a $500,000 portfolio, we might take 100,000 or 200,000 and just move that money into an annuity, and it's going to be there. You can use it for financial if you need to, but guess what? It's going to give you some protection for long-term care, and it's really exceptional. Okay, I'll explain that in a minute. Your principal is protected. Whatever you put in the annuity, and this is any annuity on offer, you don't have to worry about anything that you put in. It will never be lost due to any market downturns. And in most cases, whatever's included or gained in this annuity can never be lost as well to market downturns. So what you start with and what you gain is protected. Okay. What are the typical long-term care costs? And these are actual costs. This I've seen them higher than this, but semi-private rooms in the nursing home, $74,820 per year. Okay. 30,660 for a home healthcare aid, 4 hours a day. Homemaker services, that people that come in and do the stuff around your house, nearly $28,000. Okay. Seven out of 10 people turning 65 will need long-term care. That's a fact. Okay. It's just your bodies, you can only do so much, we have no control, even if we're particularly healthy. I have some of my most healthy clients that have gone through long-term care, and unfortunately it happens. It has no bearing on health. You can certainly make yourself as healthy as possible and probably live a longer life, but cognitive issues, things like that doesn't make any difference, unfortunately. The cost of care, basically, this is all based off the U.S. Department of Health and Human Services. So, and these are based on 2017 numbers. I know that those numbers are higher today than what I just listed to you. Okay. Alternative options: the Forcare fixed annuity with long-term care benefits offers growth potential, maximizes long-term care dollars, and provides beneficiaries with any unused funds. So whatever's not tied into this. So suppose that well, we won't even get into that, but let's just go into a case management. So if Claire and Wade use $200,000 of their retirement savings to purchase a Forcare policy, they immediately get 2 or 3 times that amount for qualified long-term care expenses. So the example is this. In this case, they're parking $200,000 of their portfolio in this annuity, which is just another financial product. Okay. But if they need long-term care services, they can get 2 or 3 times the amount. So if there's some underwriting, and so if they put $200,000 in and they're in great health, then this long-term care feature will triple the amount of money that they have available to them for long-term care. So you put $200,000 in, and if you're preferred, which is just a phone call. Okay, this is a phone call to the underwriter. They ask you some cognitive questions, ask you some health questions. and likely you'll be approved if you're healthy, you will get $600,000 worth of long-term care benefits to use for a full-blown long-term care. That's home health care, that's assisted living, that's long-term care. So your money over here in the left-hand side is in the annuity, but your money, should you need it for long-term care, is tripled in this case for long-term care benefits. Okay. How could you lose? Really? I mean, your exposure is $200,000. But if you're healthy and you have a long-term care policy, you could spend a considerable amount of that money just in premiums. But if you never use it, you don't lose it. So if you've never made a claim on this ever and you pass away 20 years down the road, your money is just in an annuity. It just diverts to your beneficiary. Done. Okay. But if you use it, your exposure at $200,000, but they're going to give you $400,000 more towards long-term care services. That's pretty solid. Okay. So, um, so more convenient. The Forcare underwriting process is streamlined. It usually takes about 30 minutes on a phone call. Okay. 93% of the applications in 2016 were approved for Forcare. Of those, 87% received premier approval. That's where you can get 3 times the amount of whatever you put in. If you cannot get 3 times, you will, at least if you're standard approval, you will get double. So if you've had some health issues, you're worried about it, and you don't get preferred or premier rating, you may get standard rating, which is twice as much. Okay. So here's how this works. $200,000 contract value of the annuity. If you're standard rating, you will get $400,000 towards long-term care benefits. If you're premier, you will get $600,000 towards long-term care benefits. So again, all we're doing is tying up this $200,000. And I shouldn't say that we're tying up, because it's, after 10 years, that money is completely available to you. And you can take 10% out of the year if you want to. So there is some advantages, but you're just allocating $200,000 in this case towards your long-term care. If you ever did need care at all, you could potentially have $600,000 worth of coverage. All right. So that's pretty solid. Okay. This is not a new concept. This is a concept that's been around for a long period of time. And, as the cost of care is going up, this is one that is floating to the top all the time. And it's something that my clients like. What this gives you is, with Forcare, they give you more control. They can choose their options from doctors, options from the doctors, whether they receive at home or assisted living health. This is a full-blown contract. If I were to take a long-term care policy from the most respected company I offer, just a long-term care policy, and lined it up next to this, it is pretty much the same thing. Okay. And they all offer home health care. They all offer assisted living. They offer nursing home. They offer, a plan of care, the whole 9 yards. This is just a what if policy. You got to have something under your belt. And this is a way to have it just in case. You may never use this, of which what you put in plus any gains will go to your beneficiary. Okay. So let's move on down here. Okay. So, it goes into some more information here, but we won't really get into it. But the bottom line is, with this policy, is that you will find that just allocating some of your portfolio and putting it into an annuity, which is just a financial product, just like a mutual fund, just like bank CDs, or it's just another piece of the puzzle that you can have. You put it aside, and if something happens, you've got protection for long-term care. So that is what I want to send to every person out there, so they understand how important this is. If you are over the age of 60, it's important. If you are entering or getting close to age 70, it's critically important. Okay. So anyway, so that is basically how this works. And I could put together an individual plan of care for each person. I don't have to meet with you. We can do it over Zoom. It's not a problem. And so let me know if I can help you. And but this is a great opportunity. I'm happy to talk about the other two options, which are long-term care insurance through a standard insurance company at that same time, and maybe a life insurance with a long-term care benefit. Okay. But when it comes to just saying, what if this happens? And if I never use it, my money comes back to me, or I can, it goes to my beneficiaries, or I can use it if you don't want it. Um, it's 100% freed up in 10 years with any gains you can get out of it then. Small price to pay to get possibly 2 or 3 times the amount of long-term care. You can keep this policy for as long as you want to. So after 10 years, keep it. It's not going to go up. It's not going to be an increase to you. You're not going to get a premium increase. They're not going to ask for more. The policy's done. Okay. So check us out on Scott Eid, and feel free to hit our website, aplanfortomorrow.com. At the very top, you'll see request a consultation. That actually goes to myself or my wife, Heather. We have agents all across, we have many agents in many states, but it will come to me and I'm happy to work with you. All right. Thanks a lot and talk to you soon.